This conference will now be recorded.
In the last session, we were talking about key topics or important topics related to interview. We were talking about top 10 topics or mandatory 10 topics that you must be aware of. We understood document splitting, automatic payment program, bank reconciliations, FIBM integration, FIST integration, fixed asset, AUC, assessment distribution cycle, cutover activities, month-end and year-end activities. Now let me try to elaborate a little about this. Each of the point I'll give a little brief about it so that accordingly you need to understand what are the other points we need to prepare practice from it. So when you're talking about document splitting, first thing as part of document splitting, we need to understand the different points. Let me delete these points
Hello,
or
sir.
let
Hello.
me,
Sorry, sir.
yeah, yes.
Hello. Sir, CO part is not mentioned in the list.
No, I've mentioned only 10 topics first. After this, I'll put the other topics.
Okay.
Okay, yeah. We'll go bits and pieces. If I put everything at a time, so you may be preparing in a random way, which I don't want. I want all of you to prepare in the same sequence that I'm giving. Or the 10 topics you can prepare in any sequence, but you should be thorough with these 10 topics first. Then I'll add the remaining topics. Okay, so first thing, when you're talking about document splitting, make sure first you'll understand TB, PNL, balance sheet. This is mandatory. So whenever you're talking about document splitting, you must mention trial balance, P&L, balance sheet, point number one. Point number two, you have profit center, segment, business area. This is second point. Plus you need to mention active, passive, zero balance. These three sets you'll have to mention. First set you'll have to mention about or you'll have to represent something related to TB P&L balance sheet. After that, it is this, and finally this. Now you're all aware when you're talking about a document splitting, it is used to make sure at the trial balance, at the P&L, at the balance sheet, you will not find any difficulties, you will not find any differences. Why you don't want to find any differences at TB, P&L, balance sheet? In every organization, you are going to generate financial statement like your TB, P&L, balance sheet at profit center level, at segment level, at business area level. Now, in order to generate a TB P&L balance sheet at profit center level or at segment level or at business area level, depending on the business requirement, you have to perform the document splitting. For you to perform the document splitting, there are three types of splittings: active splitting, passive splitting, zero balance splitting. These three things you'll have to understand. And for every splitting, preferably one example. When you're talking about active document splitting, what is the example for it? Similarly, when you're talking about passive document splitting, what is the example for it? For zero balance document splitting, what is the example for it? Once you have this much information alone, this one liner, whatever is there, this is more than sufficient. If you talk these three lines or if you cover these 3 points, TBPNL balance sheet, point number one, profit center segment business area, point number two, active passive zero balance, point number three, with one example. More than enough, nothing else is required from your document splitting point of view. This will not create any problem in any interview if you know these 3 points. Secondly, when you're talking about APP, here whenever you're talking about APP or automatic payment program, you need to first understand BP, you need to understand vendor. This first point, because APP is all about automatic payment. All these automatic payments are majoritarily related to vendor. Vendor is BP, BP is your vendor. Meaning you should have basic understanding on business partner, vendor rules, followed by manual payments, manual checks, next point, your what is this automatic payment? Next thing, your payment scenarios, and then finally you talk about FBZP, F110, printouts related to check, payment medium file. These points you'll have to mention here, meaning you need to start from the business partner. In short, you should understand what is BP, what is BP vendor, what is manual payment, how manual payments are processed, how manual checks are issued, then what is your automatic payment program, like system will automatically pick up based on the due date, whatsoever it is. And then what are the payment scenarios? Part payment, full payment, advance payment, payment with a discount, payment with tax, single payment, multiple payment, separate payment, foreign currency payment, all this kind of whatever possible scenario that you can remember, that you can represent, you'll have to represent here. Then FBZP configuration, F110, printout, checks, check related printout, payment medium related printout. And here you should also include the bank accounts. When I'm talking about bank account, here FBZP includes bank account. If you look at FBZP contains 6 steps. In 6 steps of FBZP, last step is your house bank. So house bank also you need to mention or include as part of your APP, because APP is exclusively designed for bank payment, not for cash payment. When there is no house bank, there is no bank account usage in real time. So don't skip house bank. Whenever you're talking about automatic payment program, house bank must be represented. Okay. These points you'll have to remember here. Next one, your BRS. When you yeah.
That APP 4P you told, last time. You please add that also important, no, Ajay? 4P.
That 4P is part of your F110.
Okay. Okay.
Okay. So when we elaborate in our regular sessions, I'll talk about those points. I'll list out. Now I'm writing few points so that accordingly you will be able to gather the information or prepare.
Okay.
Because I don't want anybody to prepare randomly. Whatever the points I'm writing, considering these points, you can start preparing on these points. Okay. Similarly, when you're talking about BRS, first thing you need to know general info about BRS. When I say general info about BRS, I'm representing first you should know what is BRS. What do you mean by BRS? Forget about SAP. From accounting point of view, in general, what exactly is bank reconciliation? You need to have a clarity. If this is not clear, in SAP BRS will not be clear. Right? You should know basic information related to bank reconciliation statement, and then you have manual BRS, electronic BRS, and here you should also understand AP and AR. AP and AR and GL, you should also understand. Here let me write specifically house banks. With respect to BRS, you need to understand general information about BRS, manual BRS, electronic BRS, AP, AR, and then GL module you should be aware, because whenever you're talking about BRS, entries are coming into BRS from AP side, from AR side. Customer payment, vendor payments are coming from AP, AR into BRS, and then to perform any BRS, you have to have a bank account. Your bank account is created using based on the house bank functionality in SAP. These points you'll have to remember, accordingly you'll have to prepare. So that when you're talking, when you're explaining, these points should be represented from your explanation. When you're covering these points and then when you're explaining, there's no point you will get deviated. Though you're talking for few minutes, you'll be talking all the valid points in a practical scenario. This is with respect to this. Next one, when it comes to FIMM integration, here also same thing. You'll have to understand AP, accounts payable, Next one, P2P cycle. Next one, you should know materials instead of materials and pricing. org structure. Next one, GRIR process. Price differences. Purchasing scenarios. This is sufficient. This is more than sufficient. You should understand with respect to FIMM integration. First thing is your AP. You should know what is accounts payable. After that, understand what is P2P cycle. Then understand what are the materials, what are the pricing, like raw material, finished material, semi-finished material, packing material, all this kind of a thing. Pricing, standard pricing or moving average pricing. Next, organization structure, like under company code you will have plant will have different storage locations like this. You should understand the basic structure of Next, GRIR, what is GRIR account, what is GRIR clearing, these points you should understand. Next thing, price differences, purchasing scenarios. Now if you see, nowhere I have listed OBYC. I did not mention OBYC anywhere because the moment you talk about FIMM integration, you have to know OBYC, you have to know accounting entries. That is the reason those two I have skipped here. I did not write those two purposefully because I don't want you to prepare only those 2 points. Those are by default. The moment somebody is talking about FIMM integration, OBYC configuration, accounting entries are by default, but not only accounting entries. You should talk these points, mention these points. Between these points or using these points, you'll have to talk about accounting entries, especially when you're talking about P2P cycle, like purchase order, goods receipt, invoice receipt, your payment, bank reconciliation. Accounting entries should be represented, how the accounting entry is coming, how system is valuating the debit value, credit value, what is the formula logic, you'll have to explain, which I'm not writing because I want you to list out this, so that when we are discussing it collectively, you will be able to talk what points you've listed. Then I'll be able to tell, no, this is right, this is not correct, these points you'll have to add, this point you should not talk. Then it will be more practical. If I'm telling everything, you're noting down everything, you will never understand how you need to prepare. Okay, this is with respect to FIMM integration. Similarly, when it comes to FISD integration, you need to have AR, basic fundamentals related to accounts receivable, and then O2C cycle. Here also same thing. You need to understand materials and pricing here also, because here also you'll have materials, pricing, profits, and then you should also understand something related to COPA and ST org structure. Next one, sales scenarios. Anything else I've listed? There's no price difference here. Sales scenarios. When I'm talking about sales scenarios with the discount, with the tax, without a tax, different kind of things, like your FOC, free of cost sales and all will be there. Those different kind of scenarios which are relevant, which are important for us to understand, considering our level of experience, I'll explain. Next one, fixed asset. When you're talking about fixed asset, the prerequisite for fixed asset is GL APAR. Without GL APAR, you cannot start fixed asset. Meaning you must be clear with GL APAR module before you move on to fixed asset. In this, you need to understand chart of depreciation, something called localization or statutory requirement, country specific requirement, legal requirement. These are all one and the same terms. These terms you'll have to remember. Localization, asset classes, depreciation, accounting principles, and ledger groups. Next one, depreciation keys, asset scenarios. These points you'll have to represent. What is your GL, what is AP, what is AR? Because without GL, AP, AR, you cannot work on asset accounting. Because initially to start with your asset accounting, we have to purchase the asset. To purchase the asset, purchases are coming from AP module. You should have knowledge on AP. Similarly, tomorrow if you wanted to sell the asset, you need to sell to a customer. Customers are handled with the help of AR. You should know AR. And in general, the regular postings, whatever you have, debit, credit and all, you should understand from GL module. In short, GL, AP, AR is mandatory. After that, localization. What do you mean by localization? Asset accounting is localization, country specific requirement. These points you'll have to understand. Similarly, what is asset class? You need to understand. What is depreciation? How depreciation is calculated? Next, what are the accounting principles? What are ledger groups? Why we need them for the asset accounting? And then depreciation keys, asset scenarios. Next one, ECC to S4 HANA changes. With respect to asset accounting, if there are any changes between ECC to S4 HANA, we need to understand, we need to remember those points as well. Next thing, your AUC. AUC is all about your asset under construction. Here you will have to understand something called CWAP. It is the same. Next, basic asset accounting you have to be aware. Without asset accounting, AUC cannot be done. Prerequisite is you are aware of fixed assets or asset accounting. Only then AUC is possible. Next one, your internal orders and AUC to final asset conversion process. That's it. These are sufficient. This is straightforward and simple. Capital work in progress, asset accounting, internal orders, AUC to final asset settlement conversion process you need to understand. And here let me add one more point. Somewhere here you should also talk about search strings. This is also important. Yeah, fine. And here let me also add legacy asset data migration. Legacy asset data migration also you have to prepare as part of this only, asset accounting only. Next one, assessment distribution. Here you need to understand cost elements, cost centers, allocations, planning and actual postings, and similarly configs. Cost element you need to understand, cost centers you need to understand, allocations you need to understand. You also need to understand what is planned posting, what is your actual posting, and then configuration related to assessment distribution cycle. Last one, you have cutover activities. As part of cutover activities, you need to understand different points, right from your number range, tax code, master data. Master data, when you elaborate cost center, profit center, GL, customer, vendor, all these things will be part of it. Transaction, when you elaborate, it comes of your GL open item, GL non-open item, customer, vendor, all these things are part of your transaction data only. Don't elaborate. Everything is part of transaction. Everything is part of master. Under one heading, you should know different masters, different transaction. Okay, and then you have standard cost, estimate, ML activation, Cisco, sorry. So this will be number ranges, master data, transaction data. Next point, you'll have tax codes, you will have sets, any maintenance of set if you are having. Next thing, ML activation, standard cost, estimation, cost center planning. Like this, there are so many. Let me see if I can add any other thing. Number ranges, master data, transaction data, tax code, set, ML activation, standard cost estimation, exchange rates, and so on. Okay, so when we're discussing, we'll try to add the different other points, what exactly we will do, and we will elaborate, understand about every point. So that tomorrow when somebody is asking you about your implementation project, were you part of cutover activities and all, make sure you will be able to talk in a confident way. Okay, and finally you have month-end activities, year-end activities. This is also very, very important. As part of month-end activities, what is going to happen, like your depreciation, FC revaluation, you'll have depreciation, foreign currency revaluation, and then you have GRIR clearing, you'll have exchange rate maintenance, and then you have vendor clearing, customer clearing. Like this, there will be so many. And during your year end, you will have number ranges. I'm writing combinedly, but when we talk, when we discuss, I'll elaborate everything. What is part of month end, what is part of year end, I'll give a detailed list. Number ranges, you have balance, carry forward, and retained earnings, and so on. Like these points you'll have to understand. Now in short, if you look at these 10 topics, there are some points, there are some information which we have listed. Now when you're preparing, when you're identifying the points, when you're noting down the important points based on your practice, based on your understanding, I want to make sure you'll not get deviated. You'll stick to these points, you'll stick to these fundamentals while preparing on it. Just like that, don't prepare whatever comes in your mind or whatever comes in your way. Make sure that these points are to be satisfied with respect to these topics. Only then tomorrow to anybody when you talk, they will be okay. If you are not representing these points, if you are not understanding in this way, in this approach, whatever you talk may not give the positive impact. You may be correct, but technically, but from the fundamental point of view, from the business process point of view, from the real time perspective, that may not be effective. Make sure when you talk, you create that effectiveness. The other person feels comfortable that yes, whatever you are talking is okay, convincing enough, I'm okay with this guy. That kind of approach, that kind of opinion is what you have to get from your counterpart, maybe your interviewer, your project manager, client, user, whosoever. For that to happen, the way you talk, the way you represent yourself with respect to subject should be different from others. If everybody is talking the configuration, you're also talking the configuration, and there's no difference. Make sure you talk business process, you also talk the configuration, you also talk the different kind of scenarios, which will give you always a positive feedback, which will always give you a positive feedback wherever you are. These points you'll have to understand. Once these 10 topics are clear, once these 10 points are clear, then we will understand the remaining topics. There are other topics also, but we will make sure first we are clear with these 10 topics. Accordingly, we will proceed with the remaining topic. Now, what I will do is, let me pick somebody. Now, I might ask random questions, or I might ask you to talk about anything in a generic or in a random way. Okay, Muthu, you're there.
Ajay, yes, Ajay, I will ready. Just a minute, I will hold the
Yeah.
headphone. Just a minute.
Hmm.
Hello.
Yeah. Yes, Muthu, can you hear me?
Hello.
Yes,
Hello.
you can hear. Yeah, I can hear you.
Yes, Ajay. I also hearing your voice.
Okay. Now, I want you to talk about
Uh,
BRS, Bank Reconciliation Statement, in 2 minutes.
okay. Shall I proceed now?
Yeah, you can proceed.
Bank reconciliation statement, nothing but we have to find out the difference between the passbook and cash book. Passbook, nothing but it's a bank statement. Cash book is our day-to-day cash entries. So we have to find out the difference. A difference may be happen. Suppose the bank charged something, it is recorded in the passbook only, but it is not recorded in the our cash book. So once when see the passbook, we can identify what are the extra entries happen in the passbook. Those entries we have to be booked in the our cash book. That means SAP entry. This is sometimes our check issue that will not cleared in the bank immediately, but we posted our account, that amount will be deducted from our bank balance. So sometimes check deposited, that entry maybe entered in the our cash book, that entry amount also increase. That we have to find out what is the difference in cash book and passbook. Any more, Ajay? You want?
You're done?
Yes. Gentle things only I explain. PRS.
Okay. So here you'll have to replace the
Find out
certain
the reason.
terms like the cash book and passbook. You'll have to replace
Yes.
it with cash book. You replace with your GL postings or your
Yes.
SAP accounting or in our books. Wherever
Yes.
you are talking about cash book, you replace it with our books, and wherever you're talking about passbook, you replace with bank statement.
Yes.
These terms will have to change, like the difference between our books and then the bank statement. If the entry is posted, or if the entry is appearing only in our books of accounting, or in the
Okay.
bank statement. So you'll have to replace the terminology. Cash book, passbook, replace it with our book of accounting, plus bank statement.
Okay, Ajay. Usually we are using
Okay.
the terms in a,
Yeah. That is from the core accounting perspective. What you said is correct. But when we're talking about these point in the SAP FICO related interviews, we need to make sure the terminologies, whatever we are using, are the exact ones or the similar ones which we will be using as a consultants. Sometimes,
okay,
if the person who's taking our interview is not familiar with cash book, passbook, if they are not from the accounting background, and they may be confused, what do you mean by cash book? Why passbook is coming? Nowadays, banks are not issuing passbook. They might get into unnecessary questions.
okay, okay.
And similarly, you'll have to talk about how BRS is done in SAP. Like you have manual bank statement, you have automatic bank statement. In the manual bank statement, you will be feeding the statement details manually. In the automatic statement, you will be downloading the bank statement or you will be getting the bank statement from bank either in MT 940 format or in BAI2 format. This statement you will upload in SAP. SAP will have a predefined program in your electronic bank reconciliation which will read the bank statement as it is a global format. This is a standard global format common across all the banks and all over the world. Every bank will be giving the bank statement in MT 940 in the same format. You will have the different tags in it, and then you have to talk about your configuration, how your automatic BRS is happening, how your manual BRS is happening, what are the configurations that you are doing, how system is able to do the reconciliation. You have clearing entries as part of bank reconciliation, you have direct entries as part of bank reconciliation, like your bank charges, bank income, your incoming payment, outgoing payment is part of bank clearing account. In short, when you're processing, you want system to automatically move the amount from sub account to main account.
Yes, Ajay. That is
And
PRS.
then, right. And then here to do this BRS, the prerequisite is your house bank. You should have the house bank and your incoming payments, outgoing payments are flowing from accounts payable, accounts receivable. And when you're talking about banks, you'll have to talk about house bank. If you're issuing a check, so your checks are coming from your check lots and all these kind of points slowly when you're trying to add, then you're covering different areas of BRS wherever it is connected in SAP, how data is coming, flowing and all, then that will give a good impact.
Okay,
Instead of we are only talking about the BRS configuration, if you're talking about the different points, how data is coming, how system is reading the statement, how entries are posted, don't talk about the total configuration, but only the accounting portion. How accounting entry is posted by SAP. You have posting rule. You have to go reverse. Take any one example. For example, if it is related to check incoming, your original entry at the time of check receipt will be bank incoming account debit, customer account credit. Now this bank incoming account is a bank clearing account or it's a bank sub account, bank waiting account. This bank waiting account will hold the transaction until this appears in the bank statement. The moment the transaction is seen in the bank statement, when you upload the bank statement, when you process BRS either manual or electronic, system will automatically do the transfer posting from bank sub account to bank main account. How system is posting this? Based on the posting rule. What is posting rule? What is there inside the posting rule? You have debit and credit. In the posting rule, you are representing each account based on the account symbol. Now what is account symbol, how account symbol is connected to GL account, you need to talk in such a way that the other person will get a opinion feeling that yes, you are clear with the BRS, meaning you are not only talking about the config, instead you are talking about the concept related to BRS, how this is exactly used in BRS. Okay,
okay.
right. So on any topic, similarly, when we are able to practice, when you are able to list out the points, because all of a sudden when somebody is asking in the interview or anywhere, it is clear that okay, you'll be able to talk in a conceptual way, in a sequential way. All right, thanks Muthu.
Yeah, thank you.
Yeah, Gandhi.
Yes, Ajay.
Yep. Can you talk about FIMM integration?
Yes, Ajay. FIMM integration, FIMM starts with a P2P cycle, where in the P2P cycle it starts with purchase order, goods receipt, invoice receipt, and vendor payment and BRS. And where integration happens with in the purchase order, we don't have any entry, and it comes to like the sorry, in goods receipt we have a uh, integration will happen with the OBYC transaction with inventory account data to GRI account. In the inventory account, we used to give in the BSX transaction key. We will give the GL and GLs with the debit and credit with valuation class. And when after GRI, it was invoice entry. Then vendor account data. Sorry, what was it?
Start PO
No,
from
it's okay.
POs.
Whatever you can tell. It's fine. I'm not validating anything. It's just that we're just checking how we are talking so that I can tell you how you need to talk when we actually
Yeah,
discuss about every point. This is
yeah,
only
it
to
was
give you an
GRI
idea.
account data to vendor account. From OBYC transaction, the GRI account with the WRX transaction key, we have to assign the GL accounts for the specific valuation class. And from vendor account, will be capturing from the purchase order. And the outgoing payment will be like vendor account data to bank bank outgoing account, vendor account data to bank outgoing account, and bank reconciliation will be bank outgoing data to bank main account. And
Done?
if they ask any scenario about me in the FIMM integration, I used to inform that I got the business scenario from the based on the business requirement. Business come up with one scenario like they want to if uh, they ask me to the business requirement like if purchase order raised for $100 and GR was raised for $50, and there is a difference of $50, and the logic is this logic is working for semi-finished goods, but business wants to extend this same logic for finished goods. So we have done this enhancement in for finished goods for one raw material only. Then business confirms this is working for one company code. So we want to extend for all company codes. So they have given the list of validation class and GL accounts. So based on that, we have worked on this configuration. In that way, I used to inform at the time of interview.
Okay,
That's it.
okay, good. All right. So here, when you're talking about FIMM integration, so as you started with P2P cycle and all is fine, but when you start about P2P cycle, then you need to talk about the nature of procurement. What can be purchased? You will be purchasing material, you'll be purchasing stock, sorry, you'll be purchasing services, you'll be also purchasing fixed asset.
Yes, yes,
This
Ajay.
is mandatory. You have to represent material purchase, service purchase, and then asset purchase. When you're talking about accounting entries, you've mentioned accounting entry, inventory account debit, GRIR account credit, but nowhere you mentioned that this is related to stock purchase. In a generic way, you mentioned this.
Okay, okay.
Alright. So because you have three types of purchases: material purchase, service purchase, asset purchase. In case if it is a service purchase, it will not be inventory debit, right?
Yes, exactly, Ajay.
If it is a asset purchase, it will not be inventory debit. So when you are giving the accounting entries, you have to be very, very clear. This is where people will catch us. This is
Okay,
where people will catch us. They feel that no, you are explaining me the accounting entry, but you are not telling the nature of purchases. If you tell that in case if you are purchasing any material, your GRN accounting entry will be inventory account debit, GRIR account credit. At the invoice level, GRIR debit, vendor account credit, how your accounts are coming. Inventory
okay,
account is coming from BSX, GRIR account is coming from WRX, vendor account is coming from KBS, which is through your purchase order, direct PO account assignment, and then your GRIR is again from the WRX. And what is your valuation? How your inventory is valuated? Now you'll have to talk about material can be evaluated based on standard price or based on what is the other price?
moving average price.
Moving average price. If it is a standard price, price control will be S. If it is moving average price, it will be V. In case if the material is valuated with the standard price, material will be material value is like purchase order quantity multiplied by material master price. In case of moving average price, same activity, material purchase order quantity multiplied by material master price. Now, if there is any difference, between purchase order price, material master price, if the material is valuated with the standard price, difference will go to price difference account. If the material is valuated with moving average price, difference will be inventorized, meaning the difference will be loaded to inventory only. So there is no point of price difference in case of moving average price. System will adjust the price difference to the inventory itself. So it will not take separately to a price difference account. These points you'll have to talk. Now, how your price difference is coming? It is coming based on the PRD account determination. Now, your price difference can be positive, your price difference can be negative.
Maybe. Yes, yes.
Right? These points, when you're talking, they'll not even allow you to continue your explanation. In between, they'll stop, they'll go to the next topic. But we need to make sure when you're explaining, you're going in a flow in a sequential order. When I say in a sequential order, it should be in a sequence that the other person will not stop you in between. They will stop us in between. Sometimes when you notice, when you're talking, they'll ask randomly different questions in between.
Yes, yes.
When you're talking only, they'll stop and they'll start asking you questions, because whatever we are talking is not sequence. When I say not sequence, you're talking, you're explaining about the process, but that is not in a right way. If you're talking the process in a right way, nobody will interrupt you in between, and nobody will put any cross question also. All that they want to understand from your explanation is that how confident you are, how comfortable you are with the subject, with the concept. If they're able to understand from your explanation, no need of putting any question. If they're unable to understand, that is where they will try to put different questions, because they wanted to understand your level of understanding, right? How comfortable you are with the subject. For that, no other go, they'll put different kind of questions. And if you're explaining the points, concept in such a way that they don't even interrupt, there's no point of any cross questions, you will find your interview is very simple. Okay, these points you'll have to represent when you're talking about integration. You should also talk about service related, capex related POs also. This is mandatory in
Yes.
your FIMM integration. Service and purchase of your capex or fixed asset is mandatory. What accounting entry will come if you are purchasing a service? Now your service is always procured against a cost center. You'll have to
Yes.
create account assignment category for K cost center, and your accounting entry will be expense account debit, GRIR account credit. Expense account is not coming from the OBYC, it is coming from purchase order itself. Within the purchase order, against cost center, we will assign a cost element. This cost element along with the cost center will be debited. And this you'll have to mention specifically, you'll have to talk about these points. Similarly, when you talk about your asset purchase, asset is always non-valuated GRN, meaning you will post the goods receipt for the asset. During the goods receipt of the asset will not be capitalized. Asset will be capitalized only during the invoice. These points, when you talk, when you mention, you don't even get any cross question. Even if you get cross question, it is exactly from what you talk. Whatever you mentioned, only from those points they'll put a cross question. Why this? Why like that? Now you're giving options to the interviewer to put questions. Now whatever the options you are giving, they will be putting questions only from those points. Now when you know what you're talking clearly, you will definitely answer confidently. Normally what will happen in the interview, out of a flow, we talk whatever comes in our mind at that moment, majoritarily agree?
Yes.
Because we try to go in a flow in the interview. Since we are not conceptually clear, in that moment, whatever the flow comes, you follow with it. Later on, we may not understand, we may not remember what exactly we spoke, why like that. So that will put us in a trouble. We have to avoid wherever possible. If we have a little preparation about these points, okay, if somebody is asking, this is what I need to talk. We are not specifically preparing for interview, we are generally talking about each point. Tomorrow, not only to your interviewer, whosoever is asking, you have to talk in a sequential order. All right. Okay. Thanks, Gandhi.
Okay. Okay. Thanks.
Yep. Who else is there? Manjunath.
Good morning, sir. Just now only I joined.
Yeah. All right. I want you to talk about document splitting. Manjunath?
Now you want me to explain, sir? Because I don't know
Yes.
actually. Now only I joined the class.
Yeah, just talk about document splitting, whatever you know.
Okay, document splitting to split the line items. So there are three types of document splitting, is there? So active
Hmm.
splitting, passive splitting, and zero balance clearing account.
Hmm.
Uh, Active splitting will be this active document splitting it at the invoice level whenever system will make zero at the document level, so it will be called as active splitting. So for example, you have if you receive one invoice for 10,000 stationery and related to two profit centers, entry will be stationery debit with profit center 1 and another stationery for 4,000 with the profit center 2, and vendor account will credit 10,000. So this is the entry view it will become. So when it comes to real view, the stationery with profit center 1 and credit will be the vendor 6,000 will be the profit center 1. At the same time, the stationery the remaining 4,000 with the profit center 2 and vendor will be the 4,000 with profit center 2. When it comes to passive document splitting, the payment level it will be used for payment documents, and profit center will not give here, but based on inheritance automatically derived in passive document splitting. When it comes to zero balance splitting, whenever system will not making zero at document level, then it will adjust with offsetting account. So that is called zero balance of splitting.
Okay.
That's also.
Done?
Thank you. Thank you. Yeah.
All right. So when you're actually talking about document splitting, you'll have to mention the points related to in every organization, you will be generating the financial statements at profit center level, segment level, business area level. Now it is mandatory for every organization as per every client requirement. Financial statement derivation generation at profit center level is mandatory. For us to maintain profit center level financial statement like a TB, P&L balance sheet, you need to make sure every line item, every debit, every credit which is getting posted in SAP will be updated with profit center.
Okay.
Now you have different kind of posting. There are manual postings, there are automatic posting, and there are certain postings which will come from the interfaces. There are different ways how your accounting entries are being processed. Now in some accounting entries, you will be posting common accounting entries like one expense will be there. Commonly you will post it to one cost center. You want system to split distribute between the different other cost centers profit center. For you to make sure all these things are happening in every debit credit line item, your account assignment is added. Your account assignment here you're talking about profit center, business area, segment. You need to make sure system will handle it. How system will handle it? System is going to handle it as part of your document splitting. Now this document splitting is part of new GL concept. This document splitting is part of new GL concept. In S/4HANA, new GL is mandatory. In S/4HANA, new GL is mandatory, whereas in ECC system, usage of new GL is optional, because in ECC you have two ledger concept. One is classic general ledger, another one is new general ledger. If you are using a classic GL, document splitting is not required. If you are using a new GL, document splitting is mandatory. But when it comes to S/4HANA system, document splitting is by default mandatory. You have to activate the document splitting at client level. In case if you do not want document splitting for any particular company code, you can go and deactivate the document splitting at a company code level. Now you need to then talk about to make sure that the profit center is filled up in all the line items. System will try to split every accounting entry according to three methods. One is your active, two is your passive, three is your zero balance splitting. Now you need to understand what is active splitting, in which cases it will come, what is passive splitting, in which cases it will come, what is zero balance splitting, in which case it will come. Along with that, after giving one example for each of the splitting, you'll have to talk about what configuration are we maintaining. You need to talk about we will be maintaining document splitting at chart of account level. Your document splitting is maintained at the chart of account level. For all the company codes for a company, we will be using single or same operating chart of account, meaning if you are working for a particular client or for one client, there will be one chart of account. That is reason this is defined at a client level. You are going to define your chart of account in a sequential order as per the TB schedule, as per the financial schedules. You will be creating the respective account group. For each account group, there will be a dedicated number range. For this number range, you are going to allot the item category list. For example, you have balance sheet. Within the balance sheet, not everything is balance sheet. Balance sheet is the head. Under the balance sheet head, you will have different subheadings like fixed asset, current asset, cash account, bank account, stock. Likewise, there is a different categorization of assets within balance sheet. For these things, you have to allot dedicated or the appropriate item category from standard SAP. Now these item categories are used while doing the document posting for splitting purpose. Along with the item category, system will also look at the document type that you are using. Every document is posted based on the document type. With the combination of a document type, item category, system will allow whether a document can be splitted or it cannot be splitted. And like this, when you're talking, when you're representing about the document splitting, the other person will definitely not put any question. The other person will not even wait until you complete. They'll go to the next topic. But it all depends on what you're talking, how you're talking, and at what flow you're talking, at what confidence level you're talking. Everything matters a lot. Meaning, when you're preparing for the interview along with the answer, you should also understand how you will have the confidence. First of all, you should be confident in you that yes, whatever I'm talking is correct. This is how it is used. Then the way you talk is definitely different. Your tone, your voice, your confidence level should be seen, should be realized by the other person. Only then they will easily select you. If they are finding that yes, whatever you're talking is correct, but I am not seeing that you're confident in your explaining.
Okay.
This also becomes a minus. Though you're talking everything,
Yes, sir.
but you're sounding not confident. You're like doubtful. I'm explaining, but I don't know whether what I'm talking is right or wrong. So this gives an
Correct.
impression that no, I think this guy does not have any confidence. He has not worked anywhere because he's not confident what he's talking. So all these points you'll have to take into consideration while preparing and also while talking to the other person, especially in the interview. After joining, what you talk is immaterial. Nobody cares. But in the
Okay.
interview, at least you have to be very confident. And the points that you're representing with respect to each topic should be something different. Like the way you
Okay.
talk, the way I talk, the other person should feel the difference. I think he's talking in a better way. I think he knows something better.
Okay, sir.
Okay.
Yes. Thank you.
All right. I'll go with one more last. Swati.
Yes, sir.
Yeah. Can you talk about FISD integration?
Okay, sir. Coming to FASD integration, there are two types of sales. One is order-based sales, and uh, like in this, and the other one is like in this. Sales order will be there for the other one is there will be no sales order, and coming to the sales order there will be no accounting impact, and after that there will be a delivery. Then in this also there will be no accounting impact, and post goods issue there will be an accounting impact, that is a cost of goods sold, debit, inventory credit, and later there will be customer billing or invoice, customer account or to sales account, and after that customer receipt, or there will be a down payment, then the entry will be bank incoming to customer account, and there will be a bank reconciliation, bank main account to bank incoming account. In this accounting there will be an accounting impact.
Okay.
Yes, sir.
Done.
Yes, sir. Done.
Okay. So here you'll have to start from the FISD integration means you basically talk about the customer sales. Now you can have the customer sales based on the sales order, without sales order also. Whenever you're talking about based on the sales order, this is what is part of your OTC cycle, order to cash. Order is nothing but sales order, cash is nothing but collecting the money from the customer. Now in this process, you are specifically talking about sales which are originated from the SD module. And any sales which is originated from SD module is something which will be integrated to FI module as part of FI SD integration. Now in this FIST integration, initially there will be an order placed by the customer, which is nothing but sales order. Based on the sales order, you are going to create a delivery document. This delivery document is representing what material to be delivered, what quantity to be delivered, to which customer it is to be delivered, where it is to be delivered. This is nothing but delivery note. Based on the delivery note, based on the delivery document, your storekeeper or you will be issuing the stock. Whatever the item customer has placed the order, this item will have to be delivered to the customer. For that, you will be doing the stock out. When you are taking out the stock from the inventory, then you are going to post a goods movement. This goods movement is nothing but PGI or post goods issue. You mentioned a delivery, but you skipped the PGI delivery, your goods movement. PGI has to be mentioned. At the delivery document, there is no accounting impact, but when it comes to PGI, post goods movement or post goods issue, here you are going to credit your inventory account because your stock is going out, and you are expensing out your material because you are charging it to P&L for the purpose of a profit loss calculation. So your accounting entry will be COGS account debit, inventory account credit. This is COGS account, inventory account. Though these are part of FIST integration, the entry is coming from integration.
Yes, sir.
Though PGI is triggering the GL account related to COGS material at the time of SD cycle execution, but these entries are coming part of FIMM integration. And any GL account, any hitting to the material inventory account will be part of MM. Here it is coming from OBYC, your inventory account is coming from BSX, your COGS account is coming from GBB, VAX or VAY, depending on the cost of goods sold cost element, non-cost element. After this, you will have your billing document. In your billing document, you are going to create an invoice to the customer. Here your accounting entry will be customer account debit, sales revenue account credit. If you have any other expenses, if you have any other deductions, they will be credit. They will be either debit or credit. Now customer account is coming from the sales order. Sales revenue account is coming from the FIST integration, where you are going to maintain the account based on VKOA. In VKOA, there are 5 standard key combinations. Right?
Yes, sir.
Customer account group, material account group, and then account key. Only the customer account group, account key, only the account key. Like this, there are 5 combinations. Which combinations you will be using, you need to understand. Majoritarily, only 2 combinations we will be using: customer material group plus account key, or customer group and account key. Only these 2 are most commonly used. Remaining 1 are very rarely used. And
Yes,
here, when you're talking about sales, you should also talk about COPA. Because whenever you're talking about any sale, every organization will make the sales to gain the profit. In this SD, this OTC cycle or FIST integration will not record profit anywhere. Because if you're not mentioning this, you may get a cross question from your interviewer: how do I know what is the profit from this sale? And if you're blank for this question, we will get rejected. And don't let them give these kind of cross questions. From your side only, you mention that whenever you make any sale, every organization will make the sale to gain the profit, to get the profit. In SAP, this FIST integration will not account profit anywhere. No accounting entry will be used for debiting, crediting profit loss. Instead, what SAP will do at the time of delivery, you are going to go post PGI. During PGI, COGS will be debited, inventory will be credited at cost price. COGS will be debited, material will be credited at cost price. During the billing, customer account is debited, sales account is credited at the selling price. Now the difference between cost price and the selling price will become the profit. If you are selling a product for 70 rupees and the product value is 50 rupees, difference between 70 selling price, 50 cost price, 20 will become profit. This profit will be transferred to COPA. COPA is based on the operating concern, based on the value field, based on the characteristic mapping. Automatically things will get moved on to COPA. In COPA you have account based COPA, costing based COPA. In S4HANA it is all account based COPA, which is represented as margin analysis, and then you mentioned that you have actually not worked on COPA hands-on. Only when they ask more about COPA, then only you mention you have not worked extensively on COPA. This is what your basic understanding, because in your project you had a dedicated CO consultant.
Okay, sir.
When you're mentioning these points, the opposite person, most likely there will be no cross question. They don't even put any question, they'll go to the next topic. But it again depends on what you're talking, how you're talking.
Okay, sir.
All right. So on all these topics, the way that I've explained in all these 2-3 topics, in the similar way, I want everybody to prepare. And when we
Okay, sir.
talk in the upcoming sessions, when I listen to you, I'll be giving only a few minutes time to talk. And after that, I'll rectify what you're talking, how you're talking, what points you're missing, what points you need to add, so that everybody will understand how exactly we need to talk. Okay.
Okay, sir.
So make sure on all the other topics you'll be preparing, and I'll make sure I'll make everybody talk in the sessions. It's not that somebody is excluded. The moment I list out a particular person name, if that person is not responding for any reason, if you're unable to respond, if you're not able to talk, I'll dismiss you from the session. If you're there but you're not responding to a question to talk, you have to refer the recording only. You're not supposed to be in the live session. So keep in your mind, because this is something which we are going at a different approach. I want whosoever I call out, I'll be calling out the names in a random way, but whosoever I call, I want them to respond. If you find any mic difficulties, if you find any audio connections, please put a message in the chat box that you are having some difficulties. You're unable to hear or you're not able to talk because of mic whatsoever, then I'll come to know. Otherwise, I might call anybody randomly. I'll not wait until a long time until you respond. Immediately, I want you to respond. So check your mic connections, everything, because we'll be having less time. I'll be giving hardly 1 or 2 minutes for everybody. I cannot wait for 1 minute for you to respond. Fine then. So let me stop this here. Prepare in the similar approach on all these topics, so that when we are
Hello.
proceeding with our sessions, it will be clear for everyone.
Hello, sir. Hello, sir.
Yeah, yeah. Yes,
Sir, before
Chandra.
the closing the session, I have a doubt. I am not sure that it is a right question or wrong. I am not from accounting background. Uh, Hello, are you
Yeah, yeah.
getting?
Go ahead. Yes, yes, yes. Go ahead.
Because that's why I have a two question layman questions, if you don't mind.
Hmm.
One question is actually I have idea on value impact on suppose I have a journal entry. I have a basic idea on how the amount impact on P&L, balance sheet, and also TB. But I have no idea actual how material affect our balance sheet and TB and P&L. That's a one questions, a basic questions. Another question is I have no idea at the primary cost and secondary cost.
These things I'll be explaining mostly in the evening sessions. Like in the evening, also, we are starting the interview preparations from today. There, I'm going to talk about the first point is your accounting only, there also, the prerequisite. For you to answer at a
Because
high level, when you're talking about material, material is a current asset. Agree?
yeah,
Right? Material is nothing but stock. And any stock that you are holding with you, as long as the stock is with you, it is the asset, current asset, it will go to balance sheet. And the
yeah,
moment you are selling the stock, you are using the stock, this will go to P&L as part of consumption or cost of goods sold. If you are giving the material to the customer, it will be cost of goods sold. If you are consuming the material for your own purpose, for your production, manufacturing and all, this is part of your consumption. Then it will go to your P&L.
and
If
actually
you are not,
value.
hmm,
Hello, just a value
yeah,
and
yeah,
material. This value and quantity. Both are in
correct.
my doubt. Suppose one entry
Yes,
we purchase
whenever,
one material.
hmm,
Hello, just one.
go ahead,
When
go
we
ahead.
purchase one material, we quantity we enter the quantity and also value. I think value will go to the purchase account.
Correct.
Hello.
Yeah,
And
go
another
on, go on. I'm
material
listening.
quantity will go impact on the BLM balance sheet. This is
No,
the point
it
how
is
the
not like
actual
that.
value.
No, no, no. So whenever you're talking about any material, materials are always maintained in the side. There is a module called material management.
Yeah.
In the material management, all your inventories are maintained. In the material management, it is only concerned about the quantity. How many materials are there? What is the quantity of each material available? Will not concern about the value of the material. Is only concerned about quantity of the material. Now, for every material, since you are purchasing it, every material will have a value. A material every time you will not get for the same price, right? Unless you have the agreement with the vendor. So when you're purchasing from the vendor, whatever the quantity that you're purchasing, this quantity is multiplied by the agreed purchase order price. Before you purchase from anybody, you will check the price. What is the rate for this? Or we will go and directly
Yes,
purchase.
sir.
You will check with the
Before
purchase.
purchasing,
Since you're
scrutinize
purchasing from
price.
an organization, you will have the agreements with the vendor. You say that, okay, I will be needing this material. You need to supply this material. For this year, this will be the price. So whenever I purchase, irrespective of the market fluctuations, your vendor will be supplying the material for the agreed price. He say that whatever may be the actual price of this material, I will always sell to you at a 20% discount. If price is increasing by the manufacturer, I am not the manufacturer, right? I am just a retailer. I am supplying it to you. If the manufacturer had increased the price from 100 to 110 rupees, I will be charging you at 110 rupees, but as per our agreement, I am going to provide a 20% discount on it. Likewise, your
Okay.
material will get updated. Quantity multiplied by rate at which you are purchasing from the vendor will go to balance sheet, and the quantity will get updated only in the side. That's why you have a dedicated topic called FIMM integration. These points we will detailedly understand from the basic onwards. I'll be talking to make sure those who are not from the accounting background will be able to understand what exactly is happening.
Okay,
Okay,
okay. I got actually material value will go to the balance sheet current asset, and the material quantity will go to side. Am I right?
correct. Yes.
Okay, okay, sir. Then when the material finalized finished goods, then the COGS charged to the PNL, and then
No, when you're selling the
material will
material, not
release.
when you're finalizing the material, that is COGM, cost of goods manufactured. If you are
It is
producing the material
only
in
in the
house,
balance sheet.
anything, if you are using for your own purpose, that is a COGM, cost of goods manufactured. If you are selling the material to the customer, then it is cost of goods sold. In short, from the material you are taking for your own purpose or you are selling it to customer. Own purpose, cost of goods manufactured. Customer is your cost of goods sold.
Okay, okay, sir.
Okay. All right, fine then. So we'll continue the remaining part in the next session. Bye. Make sure, as discussed, from today onwards, your interview sessions are important to be attended. Fine then. We'll connect in the evening at the same time. Bye.